So this reopening is a long time coming, and some say that the economic momentum will pick up so quickly that GDP will grow faster than Singapore for the first time in 15 years. What's your own assessment of how quickly that momentum will pick up?
Yeah. So first of all, thank you. Great to be here with you, Haslinda. I mean, it's a great event. But it's hard to look at the Hong Kong opening by itself. I mean, you also have to look at what's happening in China. I mean, and there's a lot of I mean, our role is to essentially be a great connector, and that's why we want to be a great connector to every economic part of the world, including Singapore, and try to do as much as possible with Singapore and with others. But the linkage to China by being in Hong Kong, which is the most international city of China and the most Chinese city outside of the mainland, it's a very unique position. So we are very connected with the activities and what happens in the mainland. And the reopening of China in particular has been faster than what many people predicted. If I had asked you 3 months ago, I mean, will we be in this situation by early January of completely opening up? It would have been really difficult to predict that. So I do believe that the post-COVID reopening of China is going to be the most consequential positive catalyst to global markets in 2023. It's very significant. And of course, Hong Kong is in a very unique place to take advantage of all the opportunities that come out of this reopening. And so I'm quite optimistic about the future. There was a meeting in December around the Central Economic Workforce Conference in China, which is where they set up a little bit of the parameters of what they want to do in the future. And a lot of the policies there were very supportive of growth. So
what will that translate to for the Hong Kong Exchange? Are you looking at a better IPO pipeline? Are you looking at a boost in terms of trading volumes for the next maybe 6 to 12 months?
Yeah. We've seen in the first few months already, in the first month actually, which is the last few days, I mean, activity picked up quite a bit. Our average traded volume is more or less 150 billion right now. And and it was for the whole of last year on average 125 for the whole year. Now, we say it's been really tough. There were no IPOs in last year and all that. But in Hong Kong, we had 90 IPOs, 90. Okay. I don't remember the exact number for Singapore, but
it is the worst year since the financial crisis.
Very challenging year, but 90 IPOs raising around 110 billion Hong Kong dollars. And in the last month, in December, we had 20 IPOs in 1 month. And the second half of last year, it was four times more in number of volume compared with the first half. So we clearly see a progression, and the first half started very, very, very strongly. So I do think that if China reopens the way that we're seeing it, and it'll be very positive. The Hang Seng Index, since the beginning of November, is up 40%. Hang Seng Tech Index is up 60% since November 1st. So we are seeing this translated in increased activity in the market, increasing interest. We're seeing lots of inflow, so it's positive momentum right now.
As you said, the Hang Seng is actually having the best start to a year since 2018. You talk about those IPOs. Are you expecting mega IPOs? I mean, I know that you've been after the IPO of Saudi Aramco. That failed 2016, 2018. Are you looking at getting that, perhaps?
Yeah. I mean, Hong Kong has traditionally, since the listing reforms of 2018, become mostly a new economy market. We've had 254 companies go public that are like under the new regime. Since this regime was implemented, they raised about $1 trillion Hong Kong dollars of capital. So what we want to make sure is that we are a market that can be suited for like lots of companies. Right now, we're seeing a lot of Chinese companies in the technology area and the new economy area that want to list. Some of them don't fit the criteria, so we're adjusting. We're working on a new listing regime that would essentially allow companies with no revenues or with no profitability, but that they have high valuations, high investments in R&D, companies in artificial intelligence, quantum computing, space technology, areas that are a little bit different. So that requires that we adjust the regime to really fit the companies of tomorrow. Now, something you mentioned, foreign companies that may be coming to our market, and there is also a new development that occurred in the last few months, and it's been announced by CSRC and this SFC, that essentially, for the first time ever, international companies that decide to make Hong Kong their home for listing Hong Kong, either dually listed or listed in Hong Kong, that they will qualify to be able to be bought by investors from the mainland. So this is very interesting because not only you're seeing the mainland trying to attract capital from international to invest in the mainland, but you're also seeing they're opening up, going to say, okay, this huge investment pool, which is very active, the retail of China, this is about 1 trillion of liquidity every day that they invest. They will be able to buy international companies that list in Hong Kong. And so Hong Kong will be the only market in the world whereby by being there, you're able to attract all the institutional investors from all over the world, the traditional institutional investors from anywhere that Hong Kong have been well known for many years, but also the domestic retail base, only market in the world. So this is a great development. We're going to be implementing this throughout the year, but we think it's a game changer for the future.
Not too long ago, quite a number of Chinese companies listed in the US were at risk of being delisted. Now that risk has eased somewhat, and those companies were looking at dual listing in Hong Kong. Is that not part of the plan anymore? I mean, what are you hearing from those companies now?
Oh, I mean, we have a lot of companies that want to have like a dual listing in Hong Kong. We have dual primaries. We still have like lots of them in the pipeline, but our preference is that companies have an option to list everywhere. I mean, I'm very happy actually if there's an agreement and companies can list in Europe, in Singapore, in New York. That means that there's flow, that there's transactions, that the East and West are communicating, there's connectivity, there are bridges being built. That is good because that means that investors will feel really comfortable coming to Hong Kong, setting up operations in Hong Kong and continuing to build that connectivity.
You've talked about how you want the Hong Kong Exchange to be that bridge between mainland China and the world. I mean, of course, China, a capital market of what, $25 trillion. You say it will be worth about $100 trillion within 10 years. I'm just wondering, with what's been happening in China and the reopening, is China trying to expedite that process or not?
Yeah. I'll just like speak for the capital markets itself. There is, I mean, if you look at global capital markets and the asset management industry globally, there's today globally about $120 trillion of debt and equity being allocated to different markets, and international money that goes into the mainland. Today, it's only about 1 trillion, only about 1%. It's very insignificant. The world is massively underinvested in China. Now, you mentioned that the capital markets of China, debt and equity, are about 25 trillion. That's about a little over 130% of GDP. If you look at most economy, that number is somewhere in the range of 400, 500, 600 even percent. So the opportunity to grow that capital market, and what you'll have is the economy of China will continue growing, but then the reliance on capital markets, because today people devote most of their savings and resources to put it either in real estate or in bank deposits. Very traditional, bank deposits. There's very little going into capital markets. That is likely to continue growing. That is part of an intent also that the market plays an active role in defining the allocation of resources. And something important around COVID also that I want to make sure people know, over the last 2 years, savings in China, which traditionally is high, it's always like 20% of disposable income, it's very, very high. But over the last 2 years, that jumped to over 30%. So there's about $2 trillion of excess savings in the systems in China, 2 trillion. Now with the reopening, that will have to be allocated somewhere, to travel, to like purchase things. So that is a very significant amount. I hope that a good chunk of that comes to the capital markets.
Gucho, needless to say, a lot of investors have been bumped by China because of the clampdown. We've seen that in the property sector. We've seen that in the tech sector. That seems to be easing somewhat because China keeps saying, we are open, right? But yet, just in recent weeks, in recent days, in fact, we've seen a clampdown on brokerages, Futu, one of them. I mean, how do you read that? I mean, should investors again be concerned about regulatory clampdown?
Yeah. So, I mean, in sectors like internet and definitely the financial sector, and most of my life I worked in the financial sector, so I know how heavily regulated those sectors are. I mean, we're probably going to have continued regulatory intervention and try to, continue trying to see what are the right parameters that need to be set. This was very important in what they call the platform economies and trying to set, how does this work? A lot of these phenomena are quite new. So every country around the world is trying to guess how to regulate this. What is the best way to regulate it? The good news is that every message that we've been hearing over the last few weeks is that process of rectifications of a lot of areas in the platform economy, internet economy, new economy that were not properly operated, they are being addressed, and we're at the end of the process. And so hopefully it generates a new wave of growth. I mean, we've seen some refinancing of very large internet players. And the same thing goes for the financial sector. You require licenses and regulatory permission to do certain activities, and we will continue hearing noise on this here and there.
But on the whole, the clampdown is over, you think?
The messages that we're hearing around fundamentally platform economies is that the rectification processes and the fintech, I mean, most of that process is getting towards the end. Those were the messages that came. I think the chairman of CBIRC even publicly mentioned that we're getting to the end of a 2-year process of rectification.
You've been in the position for about 1.5 years now.
Yes.
How challenging has it been? One, because you're the first non-Chinese, and also when you take a look at the management changes at the top, we've seen quite a few. I mean, is there difficulty in maintaining the team that you want, and is that impacting your day-to-day operations?
Yeah, no, I mean, it's obviously the markets were tough markets. I joined in May 2021, which was like the peak from the markets. I mean, and since then it was a tough market. We've seen then in October, end of October, the recovery that was quite aggressive. So. But the key thing is that I was like focused on the long-term fundamentals, and that's why the message that we have is we're trying to build the marketplace of the future, and we're doing that by focusing on 3 areas. Number 1 is connecting China and the world. We have to look at our advantages and try to make sure that we can extend that to other areas. Second is connecting capital with opportunities. And the third, connecting today with tomorrow. In the process of doing that, actually, we managed to attract some great talent, actually. I mean, the former CFO of the Brazilian Stock Exchange joined us, and he's our head of strategy, corporate strategy, and we brought like many other talented people to the exchange. Naturally, over time, as we start focusing on certain areas and making some progress on certain areas, we do have an opportunity to promote new people, to get them in positions that they're more challenged.
6 very difficult quarters. Have your shareholders come to you saying, you know what, you have, I don't know, 6 months, 12 months to turn things around? Has there been a lot of pressure on you to turn things around?
No. I mean, the focus is always on the long term and doing the right thing for the long term. We have achieved a lot. I mean, if you think about the initiatives connecting China and the world, there's been more initiatives around connecting China and the world. We had ETF Connect, We have the announcement of Swap Connect. We're launching bond futures. We launched an A50 equity index futures. We have Southbound Stock Connect that is going to be settled in the renminbi. I mean, there are so many initiatives that have been implemented over the last year that our focus have been in execution, making sure that we create the right conditions for our company to thrive, and the market will go up and down depending on geopolitics, macroeconomics, a lot of things. We just have to do the right thing in the long term.
Just a little question. We have 8 seconds left.
Okay.
As we take a look at the year ahead, what are you most excited about, and what do you deem as the biggest risk?
Well, I'm very excited about the reopening story and how that evolves, and how this new chapter that we have of attracting international companies into our markets. I mean, I think that's going to be very exciting. What am I concerned about? I'm always concerned about geopolitics and the fact that may derail, what we're trying to do.
Taiwan, is it?
Yeah. Not so much Taiwan, in general geopolitics. I mean, the conflicts between East and West. I mean, the purpose that one of the key things that we're trying to do is to minimize conflict and make sure that people are, speaking to each other.